Good afternoon and welcome to GrainTV. It's February 27th, 2013. To my left is Logan Burgess and I'm Brock Shimbino. Let's turn over to the Fire Tip trading software, the same software we all use here in the office, to see what happened in Chicago. Corn was up 4.5 cents, soybeans up 8 cents, wheat in Chicago off 3 cents, and Kansas City wheat was up 1.25 cents. You know, Logan, we did get some better fundamental information today for corn, soybeans, and wheat. We did see some export sales, but we also got the EIA ethanol production numbers, and that was up this week as well.
Yeah, Brock, we did see another increase in weekly production here, and if we jump into the numbers, the model here that we've been following throughout the marketing year, as you can see here, the red bars are weekly production figures. The green line is our forecast here for the weekly production numbers, and as you can see, we had another strong week here, 812,000 barrels per day reported. And once again, as you said, we saw a stronger week-over-week production figure. Really driving this has been an ethanol crush margin, which has improved quite substantially here within the last month. We saw the crush margin get as high as about $1.60 per bushel. Since then, we've seen it back off to around $1.30 per bushel. So expectations are right now for this production figure to stall out a little bit here. We're certainly going to need to see a continuation of strong weekly numbers, though, to meet the USDA's projected 4.5 billion bushels of corn going to ethanol. In our model here, we're still looking for the USDA to be over-projecting the actual number of corn going to ethanol by about 100 million bushels. But we'll keep you posted on that here on GrainTV. Certainly in today's action, that was a good number there for any corn bulls out there.
Yeah, you know, I think what's driving the front months in particular, as we mentioned yesterday, I think we're seeing a little bit of short covering as we head into that first notice day coming up on Thursday, tomorrow. You know, I think that was driving the front months a little bit, but we did see the deferred months back off just a little bit here, December and the November contracts on soybeans. You know, turning our attention to export sales, we did see some good sales come out earlier today. We saw 120,000 metric tons of soybeans going to China for next year. We saw another 120,000 going to an unknown destination for 12/13. And tomorrow we're actually going to get the export sales report from the USDA, so that's some numbers we're going to have to look at. The estimates for tomorrow are for wheat, 400 to 600,000 metric tons, corn to be 350 to 400,000 metric tons, and soybeans come in at 750 to 1 million metric tons in tomorrow's report.
Certainly, we'll be tweeting about those numbers when they come out tomorrow. But Brock, just kind of looking at the action here today, I know it does look like this corn market might be finding a little bit of a bottom here with the recent action. I know certainly you and myself are looking for the market to pick up a little bit of steam here. But what's kind of your outlook right now for guys? We've been getting a lot of calls from guys who are wondering about pricing these 13 corn futures. Do you think that this might present an opportunity to sell some bushels or take some risk off the table?
You know, we have come back just a little bit on the front months. For December, we're still kind of lagging a little bit behind on this rally.
Right.
And heading into spring, you know, I think we are going to get a little bit of a rally. We've seen better export demand. We've seen a little bit better ethanol demand. So I think demand is starting to pick up at these slightly depressed levels that we have seen. So I would take this rally as an opportunity to start looking at selling some of those bushels, or at least getting a price floor into yourself. Maybe a put strategy would be something to look at.
Yeah, absolutely, Brock. You know, I think in general this certainly looks like a market right now that's going to be making lower lows and lower highs here. So if we are able to pick up some steam, it might be a good opportunity to price some bushels. You know, recently at the USDA Ag Outlook Forum, we saw projections for ending stocks for the 13-14 marketing year around 2 billion bushels. On-farm price around 480. So certainly there is a lot of downside risk in this market right now, and it could be a good opportunity, as you said, to pick up a put. Certainly when the market's depressed is not the time to price those puts. We'll want to wait until the market rallies a little bit, take some premium off the table for when you're actually putting in that price floor. But that's kind of our thoughts on the matter. If you have any questions about that or want to bounce ideas off us here, you can always give us a call at 877-472-4607, or you can visit us over at grainhedge.com and take a no-obligation demo of the trading platform that you see here on GrainTV. But, you know, in general, Brock, I think that kind of wraps up the action that we saw today in the grain market. We'll see you guys tomorrow morning for the export sales report.